The global markets whipsawed amidst wild gyrations this week that reflects as to how tentative the sentiment remains despite Wednesday's cross-asset milestones-filled relief rally. The crude rose by nearly about 3% to about $97 a barrel on Thursday, rebounding from its worst plunge in more than 6 years. On Wednesday, crude prices had crashed on hopes the ceasefire deal will help ease the flow of oil through Hormuz. However, the fragility of the truce was reflected in the lack of clarity on the ceasefire agreement points. Reports showed continued drone strikes on Gulf nations and Israel's insistence on bombing Lebanon. Israel has also claimed Lebanon was not part of the deal, while Iran has said that Lebanon was a part of the deal to end the war. The Iranian Parliament Speaker Mohammad Bagher Ghalibaf has said that 3 clauses of the ceasefire proposal have been broken so far by the Israelis. The most impactful news on day 2 of the ceasefire are reports that show that Iran has once again shut the Strait of Hormuz. However, there are other reports that show Iran announcing some alternate shipping routes through the Strait of Hormuz. The conflicting news flow is keeping investors on the edge. Unless there is clarity on a deal, crude prices are now expected to rise back about $100 a barrel. The lack of clarity is also setting the tone for uncertainty on the meeting between Iran and the US delegates on Friday and on a sustainable peace deal. Neil Roberts, the head of the Marine and Aviation at the Lloyd's Market Association, has said time will tell whether it's a pause or whether it is peace. But in the meantime, it is highly unlikely that trade into the Gulf will simply just resume. Roberts further added that the region remains at heightened risk with none of the underlying tensions being resolved. The reversal in global market moves also reflects an important question that is now doing the rounds. Is this really a ceasefire? Now, MSCI's Asia-Pacific equity gauge fell by 1% after having surged nearly 5.1% to a 5-week high in the previous session. On day 1 of the ceasefire, the Asian stocks gauge had marked the best gains in over a year, and the Standard & Poor 500 futures pointed to a red opening after gaining 2.5% in the previous session. European contracts also showed a fall after benchmarks had rallied on Wednesday. Now, Molly Schwartz, a cross-asset macro strategist at Robobank, said that the trouble with ceasefires is that they often require both sides to agree to a set of terms and then actually cease fire. The strategist further added, however, if the set of terms are not comprehensively established and neither side can be held accountable to pause hostilities, then the so-called ceasefire loses all its meaning. The Bitcoin has also lost ground and has fallen close to $71,000 after rallying past $72,500 in the previous session. The top crypto token had fallen to a low of $68,800 ahead of the ceasefire announcement, but has managed to recover some ground, gaining nearly $4,500 in a span of a single day. The cryptos have behaved erratically through the war month. They have risen one day on safe haven bets as an alternative asset, and on another, they have collapsed as a victim of being a risky asset. All right, now to put all of this in perspective, we are joined on this broadcast by independent market analyst Mr. Ambrish Baliga. He's joining us live from Mumbai. Mr. Baliga, thank you very much indeed for joining us here on WION. Now, what's your view on the wild moves that are currently underway in the global markets?
See, the global markets have been volatile, basically due to the geopolitical issues concerning the US-Israel-Iran war, the oil prices, as well as the supply chain disruptions. Additionally, the conflicting statements coming from the concerned leaders, every now and then. And post the ceasefire announcement, markets are hopeful. But that's the reason, we saw a good relief rally in the last few days. But then at the same time, there are violations of the ceasefire happening, such as shutting off the Hormuz Strait again. Israel continued attacks on Lebanon. There were strikes across Middle East, especially the Saudi pipelines by Iran after the announcement of truce. So these are some of the reasons which are highlighting the fragility of this ceasefire.
Right, now, let me actually ask you to look into the future. It's really difficult to predict as to what could happen from one day to the next. But in your assessment, how do you think the Indian stocks will perform through the month of April, provided the ceasefire holds?
See, I expect a further bounce back. I mean, again, placing my bets on the fact that the ceasefire will continue, except for some stray incidents, and the clarity should emerge over the next few weeks. Because market participants in India have discounted that the Q4 earnings season would be tepid. But any positive surprises there could be a trigger. I mean, just like the TCS earnings which are reported, which are better than expected. So the management commentaries also would be keenly watched, as that would give us a handle on what to expect over the next 1 or 2 quarters due to these war-related disruptions. So as an economy, I think we are comparatively better off compared to our peers. So I believe that the downside is already discounted, and there could be triggers for an upside for Indian stocks.
Interesting. And also, what's your assessment of which way the rupee is headed? Because even before the war started, the rupee has been under pressure vis-a-vis the dollar. Which way do you think the Indian rupee is now headed?
I think the rupee too has seen the worst level, I mean, like in the near term, because we already seen that 95 plus levels. From there, we are recovered, and thanks to RBI implementing those measures to curb speculation. So I think the rupee should hold in this band, and in case we see reversal of the FI flows post the war, I think the rupee could in fact appreciate.
Interesting. We'll have to leave it there. Thank you very much indeed, Mr. Baliga, for joining us with that perspective there.